Okay, for this first assignment, your instructions are to build a scenario involving various business transactions that will affect the accounting equation. So here's our accounting equation, is our assets will equal our liability plus owner's equity. And so now we just need to come up with some transactions that will have an effect on that equation. So we need to have at least 4 business transactions and show how they involve or how they affect the overall balance and how the balance is maintained. So then we're going to record these transactions in the table above, analyze the effects on the assets, owner's capital, and liabilities. So when I say analyze, I mean is it going to increase or decrease that account, and if it's well, right now we're just looking at increasing or decreasing. So then we're going to refer to the business transaction example if you need some more help on page 8 of section 2 of this unit 3. So this is my example scenario. Okay, so this is just an example and demonstration. You need to replace this with your own scenarios and your own dollar amounts. Okay, I don't want to open your attachment and find that you have the exact same table that I sent you in the template. Okay, so put in your own dollar amounts and preferably different transactions so that you're not using the same accounts all the time. So in this first one, Edward and Bella, I know I'm super creative and I don't even really like Twilight that much. They opened their own store selling designer coffins for vampires. After months of saving, they were able to put $100,000 cash towards the start of their business. So we need to identify which accounts this transaction is going to affect, and I've said it will increase our cash on the left side, and it's also going to increase our owner's equity on the right side. It will increase each of them by $100,000. Okay, so then I go up to my table, and since we're investing $100,000 into this business, I'm going to increase our cash and increase our owner's equity. Okay, this $100,000 came out of maybe their personal savings account, so that's why it affects, it's not being taken out of cash, because this is just looking at our business transactions. Okay, and then this first scenario, we're talking about investing $100,000 of our personal cash into the business. So that's why they both increase. For my second transaction, Edward and Bella decide to purchase some property for their business. They buy $50,000 worth of floor space in Forks, Washington, of course. So we identify this purchase of floor space is going to add an asset value to the business. Since it costs $50,000, it will reduce our cash. We're paying $50,000 for this purchase of floor space. Okay, so then we look at the effect that this transaction will have. Our cash will decrease by $50,000, and our floor space, that's considered property, so our property is going to increase by $50,000. We're taking that money out of cash and we're putting it towards property. So when we record that up here, we're taking 50 out of cash, so we put that minus sign to remind me that we're taking it out, and we're putting it into property. So throughout this whole equation, we always want to make sure that anything on this side is equal to anything on this side. So on this first transaction, I'm good because I have 1,000 over here and 1,000 over here. This next one I'm good because I have this negative 50,000 and this positive 50,000. So that's going to equal out to 0, which is what I have over here on this line. That's what I mean by balancing. Okay, so then for our third transaction, Edward and Bella buy $10,000 worth of lumber. They're buying on account, which means they're paying for the lumber over a period of time. So maybe they use like a credit account with this company. So because they are paying for the lumber on account, this will increase our accounts payable on the right side of the equation. and increase the value of materials, the lumber's material for our coffin, it's going to increase on the left side of our equation. Each will increase by $10,000. So we go back up to our table, and our material we said is going to increase 10,000, and our accounts payable is going to increase 10,000. And for our fourth transaction, Edward and Bella make their first sale. Customers purchase $2,000 of a custom-made coffin on account with our company, Coffins R Us. So this means that Edward and Bella will receive payments over time. So that means the customer is paying on account. If they're not paying, if it doesn't tell us they're paying in cash up front, then that means they're paying on account and paying over time. So that tells us that they'll be collecting payments over time. This is going to increase their accounts receivable. Okay? We're not giving the cash right away, so it's not going to increase our cash. It's increasing accounts receivable. So that tells us we will be receiving this amount of money in the future. And then this is going to decrease our inventory. Since we made that sale of $2,000, that's going to decrease our inventory by that same amount. Okay? We sold it. It's no longer in our inventory, so that amount decreases. So like I just said, inventory will decrease, accounts receivable will increase. So let's go back up here. We have inventory decreasing for 2,000, did I say? And then we have accounts receivable, excuse me, because we're receiving it. This is customers are paying us. This would be us paying customers. So our accounts receivable is increasing 2,000, and our inventory is decreasing 2,000. So that still gives us 0 on this side of the equation, keeping us balanced. So let's just add all these totals up to make sure we are indeed balanced. We have 50,000 here, 50,000 here, 10,000 minus 2,000 gives me 8,000 here, and 2,000 here. And then on this side I have 10,000 here. When I say total, you always want to total each column. Okay? That's how we're totaling it. Then I have 100,000 over here. So I still need my equation to balance out. I need both sides to equal. So I have 110,000 on this side, and I have 50 plus 50 is 100,000, plus 8 is 108,000. That gives me 110,000. So good. That tells me I'm balanced. I have 110,000 on this side. I have 110,000 on this side. A balanced accounting equation. And that's how you do the first assignment, business equation practice.